KEFI Gold and Copper put out final results for the year to the end of 2024 the other day. Harry Anagnostaras-Adams joins us today to talk us through those results and also to tell us a little bit about where the company's set and what the future holds. Hello, Harry. Good to see you.
Good to see you. Thank you.
Now, KEFI looks in a pretty strong position on several different levels looking at these final results. Obviously, the numbers themselves have been superseded by events, including a couple of fundraisings, but the positioning of the company in country generally looks increasingly secure, and the message begins to show through in these final results. So tell us a little bit how you think KEFI sits inside Ethiopia and how that position ought to show through.
Well, how would I put it? The results of a pre-production company in the mining sector in financial reporting terms are often rather meaningless from the point of view of measuring performance because we at least write off all our exploration and carry the development assets at a modicum of what they're worth fundamentally. So, and as a truism, we're a pre-production company, so we're reliant on raising capital from time to time to do what we do, and therefore, comments of the company needs to raise capital in the future to fund its developments and so on are truisms. They're not profound revelations, if I can put it that way. And I think the really notable thing about this annual report to me is the fact that we've reported that we've indeed assembled the capital for development of a project that underwrites 10 to 20 times multiples of value increase against the company's current market capitalization, and have done so without the necessity to raise the capital ourselves from our own shareholders. That's point one. Point two is that, and perhaps this needs to be explained a little bit, but the fact that we've onboarded tier one institutions up at the parent company level is profoundly important. And the reason it's so important is that if you look at the structure, if you stand back from the structure, and there's a little organogram in the annual report that shows it all, you can see that there's very large banks down in the subsidiaries, there's government as a joint venturer, there's major contracting organizations, there's local investors, they're all coming in, they're all institutional, large organizations. And when they look at the parent company, the leader, if you like, of the whole syndicate, the one who's providing the day-to-day leadership from the front, the one who's assembling all these parties, the one who's giving words of undertaking and corporate guarantees, KEFI is the smallest organization involved. And so all of them, multi-billion-dollar organizations for most of them, and all of them much larger than KEFI, are looking at KEFI and have followed our lead and our sponsorship and our comfort and our due diligence. But they need, how would I put it? They need to see a stronger company in KEFI. We're building major enterprises in countries that are doing it for the first time. They need to see a stronger KEFI. What I mean by that is at the shareholder level with deeper pockets and the ability to develop for the longer term. And that has just been achieved for the first time. We have introduced to the KEFI share register tier one institutions, global investment institutions, for the first time, partly because there's been allocation of capital to this sector for the first time in perhaps 15 years by tier one institutions, and partly because of our own, circumstances, the developments we've accomplished and where the company sits now vis-a-vis its projects, its countries, and its metal prices. So to me, the most important single thing that is reported in the annual report is not just the numbers and pictures and faces of the people that we've put together, but the fact that the group now, for the first time, is starting to balance out. We've assembled very strong supporters down below. We've sort of forged strong relationships in country through thick or thin of challenges over the last decade. But also now we've brought into the parent company tier one institutions. And frankly, if it hadn't dawned on a shareholder before, I'm making it quite explicit now that that is fundamentally important to give comfort to the whole syndicate of backers down in the countries, that we have the wherewithal financially as well as intellectually and stamina-wise to build serious businesses in new sectors in these countries. And that to me is a watershed moment. And I breathe a huge sigh of relief now that not only, the metal price, the countries, but also now the structure of the company has shaped up, if you like, for what's coming.
Now, one of the reasons for the strength in depth, which you're talking about there in terms of bankers, JV partners and others, is simply the robustness of the project itself, the Tulu Kapi gold project. And a striking number, which I've seen KEFI Gold and Copper refer to on occasion, is that on current gold prices, hypothetically, the company should, or the project should be able to pay back its capital cost within the first year's cash flow at the current gold price. Now, whether or not it chooses to do that is a different kettle of fish, but it's a startling indication of how economically attractive this project really is. So tell us a little bit about Tulu Kapi in that context, Harry.
Well, Tulu Kapi as a project was around a long time. It was discovered in a modern sense about 20 years ago. But about 10 years ago, we were invited in. I was, if you like, tapped on the shoulder by one of the largest PE funds in the world and asked to have a look at it because they were unhappy with the way in which it was being handled. And to cut a long story short, we went into Ethiopia, had a good look around, and decided that its siting was a good place to be sited, away from any border, no artisanal legacy issues, social or environmental. It was a good Kickstarter project for a group. We already had a love affair, if you like, with the region and its prospectivity, but this seemed to be a very good, first step project. We then dug into it. It took us 18 months, 2 years, whatever it was, to tidy it up. We had to go back to square one. There was no misrepresentation or fraud or anything like that, but they were just been undercooked technically. We needed to go right back to square one and build it up from, pull it up by its bootstraps, metaphorically speaking, in a way that, people who've done it before can. And so it's built on a solid foundation technically. Around Kalgoorlie, there's many projects like it, and our people emanated from that part of the world and put it into proper shape. That's the project, a straight up production proposition on a style of deposit and metallurgy that's been developed many, many times in a location which is fairly benign from a social and environmental risk point of view. And We would have been up and running 5 years ago with the benefit of hindsight if the country hadn't wobbled. But we're a stronger company because the country did wobble and we strengthened up our boots on the ground and our systems and procedures to deal with it. And so Tulu Kapi, from some years ago, was and remains a very straightforward production proposition. Obviously, everything takes proper management and attention to detail and rigorous oversight, but there's nothing weird about it. It's a very vanilla project in an operational sense. And I think now we're a stronger system combined with the government systems around making sure that the project has a clear run. So it's all been to do with not whether we could do it, whether it deserved doing. It's nothing to do with that. It's always been, how do you finance a project of this scale in the midst of the sector having been rather like a leper over the last decade? No major institutions wanted to allocate capital to this sector, and only devout stock market, speculators on the sector turning were prepared to bet on it. And they were wrong for most of the time, and they lost money because the sector kept going down and down and down. Most of the companies in this sector on AIM have disappeared. So the answer to your point about the multiples of upside here is a combination of two things. On the one hand, the sector is underpriced. On the other hand, the project is strong. And only for the second time in my working life, which is longer than I care to admit, this project's ready to roll at a record gold price. That alignment of the project being, absolutely ready and the price of the product being all-time record highs, that's a very rare moment. So you've got a sector which has been treated like a leper by most of the world, other than the devout people trying to bet against the world, if you like, and a project that's ready to go now, and the two will sort of move towards each other as we move forward, and the multiples of upside are obvious for all to see. So as we de-risk, the value should appreciate to reflect the reality, and as the allocation of capital into the sector improves and strengthens, the gap will close. So you've got both phenomenon, I think, working. And all I can say is that, we were on the defense for a long, long time, just surviving, defending the project, defending everything to do with the project. And all of a sudden we're on the offense, and it's the talk, the answer to your questions I'm giving is not really about financial results, because listen, I was qualified as a chartered accountant before I went into business management, so to speak. But I think other than looking at what are the tricks, not tricks, but what are the issues and specifics about solvency and how do you value and how's it carried on the books and those sorts of things. The financial accounts really don't mean a great deal in the context of where the company's at. I think, when we're in production and one can measure actual, P&L, it's a different matter. I think what's really critical today is the fact that the sector is actually getting the allocation of capital beginning again from major global institutions, and the projects are starting to, take off. And I don't know, maybe I'm wrong with this, but I don't remember ever in my working life hearing global political leaders talking about resource security. I don't remember it ever happening before. You know, I've been deputy chair of the Australian Gold Council when the Australian Prime Minister or Deputy Prime Minister announced that gold was a dinosaur and gold was selling and Australia was selling all its gold. And this was the Deputy Prime Minister of the world's #2 gold producer. I couldn't believe it. And we had to lobby and so on and so forth, you know, and now President Trump and other world leaders are preaching about resource security. So I think this sector's sort of coming alive again, you know, and we're just lucky. We've got a project like Tulu Kapi, which is a solid, as I call it, straight up and down vanilla gold development at that moment, you know, to kick off our production life after all these years of as an explorer developer.
So finally, Harry, tell us a little bit about construction. How do you see that going, and what should investors be looking out for in the coming months?
Well, we're in June, and because of that, I don't know if you noticed, but there was quite a sort of notable announcement in May about parliamentary ratification of one of our banks. The other one already had it. What that means is that the Parliament of Ethiopia embraced officially, legally, the protections that these banks required in legislation. And that sort of triggered a whole bunch of things. We triggered the last minute price confirmations. We need right up to date terms and prices confirmed for construction so that contracts can be signed with fixed price lump sum components built in. And that's underway. And during the month of June, we'll have our indicative numbers confirmed. We'll have the documentation, legals lined up. They already are mostly. And that means that from July onwards, we're basically waiting for the final formal sign-offs. You know, it's a matter of weeks, not months, so that we're all in position to sign definitive documentation. So over the course of the next months, I think you asked, what you've got is a process that was triggered in May with that ratification heading to final sign-offs and launching. So that's well and truly sort of underway. You know, I'm preoccupied now with not so much the banking side at all, not so much the contracting side at all, because both of them have momentum, and I don't need to be a sort of a whipper, which I have had to be in the past. They have momentum. There's leadership both inside our counterparties and inside the company that's doing the whipping. And I'm purely focused on sort of looking ahead from that and on the next stage is what I should be. And so I think that over the next couple of months, you'll see basically all the announcements that you'd wish for of final price on this, final price on that, final schedule on this, sign off on that, and launching the project, and laying out to ourselves and our stakeholders, including our parent company shareholders, the shape of the company going forward. There's quite a number of choices emerging. You know, there's no. You know, I'm in Dubai at the moment, talk about capital, you know, turning its attention onto this sector. The largest investor in African mining in the last year was the Gulf. I mean, the world of capital allocation has changed dramatically in this sector, and it really is an exciting prospect. But the next couple of months, the key thing is just get this show on the road at Tulu Kapi, and the rest will flow from there.
Harry, we look forward to watching it happen. Thanks very much for joining us today.
Thank you, Alistair.